Broadcasting live from the Business RadioX studios in Atlanta, Georgia, it's time for Atlanta Business Radio. Brought to you by OnPay, Atlanta's new standard in payroll. Now, here's your host.
Lee Cantor here, another episode of Atlanta Business Radio, and this is going to be a good one. Today on the show, we have Alex Reffett with East Paces Group. Welcome, Alex.
Thank you for having me.
Well, I'm excited to learn what you're up to. Tell us a little bit about East Paces Group. How are you serving folks?
Yeah. So we're an independent wealth management firm. So we're primarily focused on helping people figure out where to put their money, which is a constant challenge in the world we're living in.
So what's your backstory? How'd you get involved in being a financial advisor?
So I was one of the, I guess you can say, lucky ones or unlucky ones that always knew it's what I wanted to do. I figured it out pretty early on when I was in college and, taking some pretty technical derivatives classes and, with options trading and things like that. And, kind of as a kid always had the dream of going up to Wall Street. And then I heard back from a few people that lived that life, and it wasn't all the glamour it seemed to be. So I just wanted something that was really, I felt like my skill set was actually going to help people and have some sort of intrinsic value to it. So I kind of discovered the world of wealth management, and it's been on a one-track road ever since. I got my licenses while I was still in college, and I got some of my first clients actually while I was still in college, and always was with an independent firm. Never went with the big wirehouses, which was, I guess, I'm finding out pretty unique and added its challenges for sure, but gave me a different look into what the industry could look like going forward.
Now, can you explain to the listener the difference between maybe some of these larger firms that you see on, stadiums or on commercials, and then an independent firm? Because not every financial advisor or wealth management is like, picking stocks or picking investment. They're kind of salespeople that other people are kind of doing that kind of work, the choosing of where the investments go.
No doubt. If anyone is thinking that their advisor is operating on an island, if they are, that's probably something to be concerned about. But for the most part, you're exactly right. The advisors, especially in the large kind of household name, stadium branded type banks, are really focused on sales. I mean, they've got their client relationships and their people, but what they're doing is they're selling their firm's product to their client, and that can, obviously there's a wide variety of people out there, a wide variety of ethical disparities between individuals. So, the experience may be greatly different. You can have a great financial advisor at a large bank, but there's just a lot of layers and mess with that is not really something that I felt like was necessary. And I guess that's kind of the core of why I believe in the independent space, is because, whether or not, some of those things can be good or bad if used correctly is up for possible argument. But what's I don't think up for argument is what's necessary to help a client manage their money is much, much simpler and more straightforward than all the complexity of the products the big banks try to add to the mix.
Now, can you talk a little bit about your vision by becoming independent and owning your own firm rather than kind of be part of these larger institutional entities? What were you kind of trying to accomplish, and what did you see that was possible?
Sure. Well, there's, when you look at what clients need, what the kind of the basics of a wealth management firm, what they need to provide to clients. One is portfolio management. They've got to figure out where to actually invest the money, what makes sense. Have a team that is everything from research to implementation of just seeing what's out there in the world and what we need to be participating in and what we need to be staying away from. So you got the investment component. And then you have the planning component. You want to figure out, you can invest in a great portfolio that runs out the years, but if you don't have a plan for how you're going to spend your money, whether it's say a business liquidity event where you're selling the company that was your cash flow for years, and now you've got a lump sum and you got to figure out how much to take every year, or Social Security planning, or just a general saved in a 401k for 3-4 decades, and now I'm going to spend that money that I've saved. There's a lot of complexity that comes to that planning. So, having those two things really buttoned up and dialed in is the core of what we needed to create. An investment process, an investment management process, and then a financial planning process. So, fortunately, it kind of worked out well with my two partners. Each are kind of experts in those individual realms. So it created a great team to kick off the company and be able to offer that. But kind of looking forward, the reason I believe the independent space is so important for that is, when you take the investment management process, for instance, what are you trying to accomplish? If it's the best asset allocation with the lowest possible cost, which is what I believe is best, or do you want to take the strategy that many others have taken in the past of layering funds, funds of funds sometimes to try to get the most possible performance out, but just adding a lot of fees to the bottom line for that client in ways that they may not even see or understand. And that's what I was definitely trying to avoid: expensive, kind of mutual fund type strategies that were kind of so commonplace. And I was also trying to avoid, proprietary strategies. We don't have any of our own funds here. So that really, allows us to organically look out at the world and say, what's best for our clients, and just go find it, as opposed to trying to sell anything of our own. We don't have any funds of our own. It's just, we're kind of looking at what's out there and the tens of thousands of options that are out there, and what's the most bang for the buck.
Now, because there are so many options out there, how do you kind of create a portfolio that makes sense for like an individual? Because everybody has their own risk tolerance, their own goals, and some people are in an accumulating stage, some people are in a deaccumulating stage. How do you kind of cater to the individuality that every client probably desires? At least maybe that's not kind of reasonable, but that is what they desire, something that is customized to their unique situation.
Sure. No, that's a great question. I'd say it's probably one of the most common ones too. And what I've always kind of pushed back on a little bit is, everybody is different, but in a lot of ways, people are the same. That's where I think people have maybe a bit of a misunderstanding of, their own anecdotal experience and thinking that it's very unique. In reality, most people do want a lot of the same things. They want to retire with enough money to be able to live the life they've been living without having to stress about running out of money. That's the basic objective. That people have, a lot of similar, and business owners, that are looking to have some liquidity event, sell their business, with that lump sum, they got to replace the income they've been getting. So there are similarities, but you're totally right that there's different phases of life and different temperaments as well. That's really the places where people differ. Is you've got different age groups and phases in life, and then you've got different emotional temperaments for how much you can weather risk. So those we definitely take into play. And when we're figuring out how to invest a client's money, we're the main thing that I consider, I think, is probably 90% of the objective is their time horizon. The period that they're investing and the purpose that they're investing for. If they're 30 years old and they're life doesn't always go to plan, but if it does, you're kind of thinking saving for 30 or so years to accumulate and then distribute that money the next 30 years of your life, then you certainly want to invest in a portfolio that will grow to meet those needs, which would be very different from the 70-year-old who has money beyond their needs and just wants to preserve it, not wake up in the middle of the night worried about what the market's doing, and just has a different, both both financial need and emotional need. So, but in general, I think people are more similar than they think. We've got most of our clients that are in, say, the 30 to 35 range are pretty similar in what they're trying to accomplish. So, although there may be some nuances to the way we invest their money, one may have a legacy holding in a stock their parent bought them 20 years ago they want to hang on to, or something like that. But philosophically, most 30 to 35-year-olds we would have a similar portfolio for, and most 70 to 75-year-olds we'd have a somewhat similar strategy. But the disparities at that point are usually just based off their temperament. Some people are very, very risk averse, and others are not. So.
Now, when it comes to the risk in any investment, how do you manage that? Because a lot of people might say they're, I'm risk averse, but, when the market punches you in the face, then, that becomes a true marker.
Sure.
They can say I'm risk averse, but, when the market tanks, are you getting a call from them saying what's going on? That they may not be as risk averse as they think they are.
Yeah, you nailed it. I don't even know what I can add to that, because you said that perfectly. There's a lot of what we do as well as behavioral counseling. I know that's kind of been an industry term that's popped up over the past 5 to 10 years. But truly, you're trying to educate clients, because what their understanding of risk and what the realities of risk are a lot of times different, because there are many types of risk. That's what people think is just risk. they just call it one thing, but it's really, really subdivided. There's all types of risk, and just kind of the simple example is, when you talk about market risk, which is what they're usually kind of referring to, is what's the risk of the market going down, and they'll say when losing all your money. It's like in 08, 09, which was the great recession of our generation. If what did it take to lose money in that environment? Because the market's twofold its peak before that even happened. So it's not as if if you didn't have to take money out and you were properly positioned. So many people tell me they lost a bunch of money in 08, 09, and I always try to ask them why. Why did you lose money? And sometimes it's an awful situation. They got sick, or I've heard some horror stories of had to sell the house, and had a family issue, and it was just horrible timing. Of course that lost my job. I didn't expect to not have a job for 2, 3, 4 years. There's obviously terrible stories, but if for the most part, if you plan for the worst of times, you get through those things, and your portfolio goes down. But when you're talking about risk, it's just important to figure out what risk is, because is your risk losing money, or is the risk needing to spend money when the market's in a correction? Because they're not the same thing. If you talk about, what are the odds that during a market recession that a company like, Apple or Delta or just a big house, Procter and Gamble, something like that. What are the chances that they're going to have some negative effects in a broad market correction? They're pretty high. But what's your chance of losing all of your money in that investment? That's a much different. I'm not saying the answer is zero, but it's a much different answer. So it's just important to, when people think of risk, I really try to coach them in understanding what the risk is. And the only risk I think people need to worry about is running out of money by having a bad financial plan.
Right. And I think that's one of the challenges in your work and in this industry as a whole is they don't ring a bell when the market's at a high. They don't ring a bell when the market's at a low, and they don't ring a bell when your time is up on this planet. These are a lot of unknowns, and there's a lot of variables, and it's, for the lay person who isn't like you live in this world every day, you can see historical trends and you understand the history of the market and the American economy and things like that. And then you feel comfortable in that history and knowledge. Whereas a lay person, I think those are overwhelming unknowns, and it's hard to plan when there's a lot that's out of your control.
That's true, and it's interesting too. What certain people respond to. There's you take, say, COVID last year. That a lot of people don't realize, because it happened so quickly, but that was the sharpest market drop in history. You throw the Great Depression in the 20s, 2008, 2009, nothing even came close to that. I think it was 37% or so within 6 weeks. That was just an insanely quick and market drop, but people, I feel like, for the most part, understood why it was happening. And surprisingly, very few clients really negatively responded or got very concerned about that. Because for the most part, you got to think of what people are thinking about. They're thinking about, they're not able to go into work, and their kids can't go into school, and new mask mandates and quarantines. And, that's where their head's at. They're not thinking about their 401k, just because what they're dealing with in front of them is so much kind of more consuming. So it's been interesting to see. And then at the same time, when nothing's really going on and everything's cruising along, but the Fed hikes interest rates a little bit and the market responds negatively to it, you'll get more calls about that than COVID. So, it's interesting to see what people respond to, but it's usually based out of emotion. But you're totally right. If you live in the industry, you see this day to day, you're staring at it, kind of have a general grasp of why things are happening and what's normal and what's not. It's a little bit easier to digest than just getting a statement in the mail that where some money looks like it evaporated.
Yeah, I think that it's interesting, I think, from a generational standpoint. Like, my parents lived through the Great Depression, and that left a mark, obviously. People you mentioned, 2008, that left a mark. COVID's going to leave a mark. But the people who are investing nowadays, I think, are lulled into this bull market that's been going on for so long. I don't know if they have the memory or the knowledge of history of the mark that the Great Depression left, where you're talking about, kind of lost decades of pain when it comes to finances, and they're in a kind of mental state of, this is, it's always trending up. It's everything's going to be good, and it's just a matter of, oh, that's a blip. But when the market dropped, like you said, that dramatically over that period of time, I think inherently people were optimistic, and they were like, oh, this is just going to bounce back. It's obvious it's COVID, and this is going to go away shortly. And I just don't know how resilient we're going to be if something more dramatic happens.
No, you're absolutely right, and that's you said something that it's something I agree with, and that I think people they just misinterpret a lot of times. You said these certain times of in history where things have been really tough and haven't. Markets have gone sideways or had these recessionary periods that have been really tough on people, left a mark, and it does leave a mark. But my I just urge people for that mark to be not a reminder of fear, but to be a lesson. There's lessons to be learned from things that happen, and the biggest lesson is not to prevent it from happening in the future again, because you can't do that. There's no way for an individual to prevent a recession from occurring in the future. We're going to see those. I don't know what's going to cause them, but something's going to cause the next 5 recessions over the next however many years in our lifetime. But there are lessons to be learned in the context of how do you build something that's resilient to where you don't have to, sell the aggressive parts of your portfolio, for instance, in a down market. There are ways to create strategies that are representative of what could go wrong. There's not nobody has a crystal ball to perfectly predict exactly the best way to hedge a future volatile period, but there are sensible approaches and that's really the core of what we do, and trying to figure out, okay, where are the risks to you personally? Like, what are you worried about? What period, how long of a lengthened recession could we survive if markets really, really didn't cooperate? How many years do you need to feel comfortable with? Is it 3 years? Is it 5 years? Is it 10 years? And then we can build a portfolio that has that in it. Something where if you go through a 10-year recession, you've got bucket to draw your needs out for 10 years. And then the rest, unless you think the recession is going to last longer than a decade, we can have a little bit more of a growth strategy to it. So, I mean, everybody's different in that regard, but, I urge people for that to be a lesson learned. When in 2008, which was the biggest recession of, our modern lifetimes for all of these generations. I mean, I was studying finance during that time. And there were people that obviously were close to retirement during that time, but that's the biggest example. How many years did it take to recover from that? The market, I mean, it's about 5 years. So, let that be a lesson. If that happens again, have 6 years to where, and then you should be able to sleep at night.
Right. Well, I think this is why it's so important to find a financial advisor to partner with, because as a lay person, you just can't. It's hard enough to live life and your own life with your own worries and your own business, your own challenges, and then to layer this on top of it. This is a full-time job, and I think it requires a trusted advisor, a financial advisor, to help you through this, because you need someone watching your back. And that's why I think it's critically important to have a partner like this on your team, because the lay person, unless this is all they're doing 24/7, is going to have a hard time navigating the rough waters when they come.
Yeah, no, you're totally right. And just to add to that as well, I think taking the emotion out of it is one thing that helps. I mean, it's not just a partner that's doing it full time, which is obviously has its value and, strategically speaking, and hopefully has a huge benefit on that level, but just someone who isn't looking at their money like their nest egg and overly protective of it, to a degree that can become a little bit irrational. And that goes for us too. I mean, I much prefer personally other people to, and I know the industry well. I still like, bouncing ideas off my partners for my own personal money, because, you have this weird, this as humans, we have this defensiveness and this protectiveness to our money naturally, which isn't a bad thing. But in certain cases, when times get tough and decisions become tough, it's good to have someone that can kind of take the emotion out of it and be a bit of a counselor and just an emotional resource to you.
Now, in your practice, do you have a niche that you serve, or is it kind of, wealthy families, executives, former executives, business owners? Is there a niche that you kind of work in, or is it kind of all comers?
Yeah, I mean, naturally, just with a firm of our size, you've got a little bit of everything, just because personal relationships are really what drive it. I mean, the primary thing we look for are just good people that are nice people that kind of value the work we're doing, and because I mean, it's something where it's people's money. They can get the wrong kind of temperament, and it's not a healthy relationship where we're not as helpful as we could be, and they're not getting all from us that they could. So, the first thing is just that we like each other, and it's a good positive relationship that we feel like we can benefit from. And then as far as a niche goes, if we've got any kind of niche, it would definitely be business owners, mostly because we've got an expertise in transition planning, for people that are, which is happening a lot right now, partially due to I think a lot of the success we've had over the past few years is, we specialize in helping business owners that are selling their business and then having a major liquidity event that's equivalent to a retirement, and needing to figure out, now that they're not taking partnership distributions, they've got a lump sum that's got to last them potentially their lives unless they start another business. That's definitely, I would say, the core of what we're able to help with on a niche market, but we've got doctors, engineers, business owners, pilots. I mean, you name it.
Now, in your work, you decided to go independent, but you decided to become part of an independent advisor network. Can you talk about the reason behind that and the rationale, as well as the benefits of being part of this larger network?
Yeah. Well, to, I guess, be a little bit more specific, is I kind of am actually trying to create that independent advisor network, where we are an independent firm, but these independent advisors have been able to bolt on to us for some of those core needs that they need help with. I mean, as we mentioned, earlier in the call, it's kind of hard for an advisor to wear 18 different hats and be the best best planner, best investment advisor, best business owner, everything. But they do want to do right by their clients and have some help, especially in those two areas of investment management and financial planning. So we're able to offer that. And these guys, they've got their relationships. We're not forcing them to, act in a certain manner with their clients as far as, selling anything particular to them. I mean, we don't sell anything really. We just help them manage money. So, how they utilize our resources is up to them. But we just kind of we've created this network of independent advisors now where, now we've got 6 that have joined us on top of the 3 of us who started the company. And, it's a great relationship because, they're able to work with their clients in a way that suits them, but they can also know they've got kind of a team behind them when times get tough, and they've got a research team. So they're not out on an island, being that end all be all for their clients. But at the same time, they don't have a big bank telling them, to sell these mutual funds. So it's kind of hopefully the best of both worlds.
So now, what was kind of the genesis of that idea to create this network to find, I guess, like-minded people that are, maybe they are on an island and that they need just the sense of community and the idea that there are people kind of working together to, I don't want to say battle against these large behemoths, but people are out there that are kind of living through the same thing. That sense of community just by itself is valuable.
Absolutely. I mean, and just on more of a personal note, I mean, that's one of the, I know a lot of people have experienced, and we're not unique in this, but the heartbreaking thing is we kicked this thing off in 2019 and had this awesome year of, just from a social presence and, communal presence. And then, dealt with the reality of COVID like everybody else and had much less of that. So it's been a sad thing, but at the same time, having those, calls where we all are there together and, it's a Zoom call instead of all being in the same room together like it used to be. But, just that community of just bouncing ideas back and forth, asking about people's families and how things are going, or, how, if they were able to, get that deal closed with a client or whatever it may be, just having someone that understands what you're going through and, maybe a lot of times better than your family would if you're just kind of out on an island. So it's been great. But as far as the need for it is, or the realization for the need for it is just being one. I was always one, when I first started out in college, when I got my first clients and kind of found my way into this business on the independent space, I got started kind of in an operational role with a solo guy. He was an independent financial advisor, and it was just him and me. So he had a business. He'd been in the business for 20, 25 years or so. But it was just me helping him, manage his clients and run the business. And we were kind of out on an island. And, I think that was kind of the original genesis of all this, is just realizing that, man, it would be nice if, there were more of us and we could kind of share some economies of scale and maybe invest in some more resources as a team together and things like that.
And in what ways do you see moving forward that you can kind of invest in? What are some of the things you'd like to invest in if you can as the community grows?
Yeah. It's kind of it winds up being a pretty perfect science, believe it or not. As we add to the community, as we add to our network of independent advisors, we, what they contribute financially to the company basically goes directly into new resources, which are, the biggest thing that any quality firm needs. I'm a big believer in this, is a solid operations team, someone who can really get clients what they need on just on an operational administrative level. So investing in that, we're continuing to invest in our investment platform from a headcount standpoint as well. Trying to get people that can, as you start to get from 300 million to 600 million to over $1 billion in assets under management, really just having the infrastructure to be able to manage that and make sure that clients are getting all their needs met, and that our strategies are actually getting implemented is another place that we're continuing to. As the headcount grows, we then become servicers to the advisors. So we're kind of just continuing to invest in what we can offer almost them as clients in a way.
Now, is this something that is only Atlanta-based, or are these advisors coming from anywhere?
Well, we're pretty new. So currently we've got most of our advisors are in the Atlanta area, not necessarily in town, but in the Atlanta area. And then our most recent advisor that joined us is actually from North Carolina. So, it's not something that's restricted, but it's one of those things, Southeast presence is definitely where we're headed, at least in the near term, just because, that sense of community, it doesn't have to be every day. A lot of these guys have their home offices, but we, at the same time, want to be able to all get together and, have our, even if it's just on a social level, as you mentioned earlier, the community is important. So, we don't want these people to feel like they're out on an island. We want them to feel like they're, even if they're day-to-day in a home office, that they've got a team behind them. They come in every once in a while, maybe to meet with a client in our conference room or, have lunch or do our office events and things like that.
So if somebody wants to learn more about your practice, if they're looking for a wealth manager or a financial advisor, or they are a financial advisor and they're independent, they want to join the network, is there a website? What's the way to kind of learn more about this opportunity?
Sure. Yeah. The best thing to do is our website is just eastpacesgroup.com. They can got all of our contact info on there and just reach out to me. We try to cut through all the benefits of being independent. That's, smaller businesses. You can get to me directly and just, let's get a coffee, whether it's a client or an advisor that's looking for maybe a different game plan for their life, then we'll love to just sit and learn more about them and what they're looking for and seeing if we're a good fit.
Well, Alex, thank you so much for sharing your story today. You're doing important work and we appreciate you.
Yeah, no, I very much appreciate the time, and it was great talking with you.
All right, this is Lee Cantor. We'll see you all next time on Atlanta Business Radio.